Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and what we're going to talk about today are economic data coming out today, earnings today, and in fact, last night. We did an earnings trade last night using an options strategy called a strangle. For those not familiar with a strangle, that is where you sell, not buy, but you sell both a call and a put. And we'll talk to you a little bit about that strategy. That strategy should pay off today by selling a put and a call and not buying. You are the casino, not the gambler. And trust me, the statistics clearly show that your consistency, or I should say, your POP, probability of profit, increases dramatically versus buying premium, buying options. We'll talk about that in a moment. So today, initial jobless claims, we have at 8:30 coming out. Very important number. Hopefully for all these poor people that have lost their jobs, they're dropping down and they can get their lives back to normal. Yesterday, we had Fed Chair Powell come out. Dovish, then he used the word froth. I'm assuming, because I don't watch him anymore, it's because it's like watching paint dry. He used froth as it relates to the equity markets, and that is not good for the equity markets. Good morning, John. Well, actually, good evening to you. That's right. That's what I love about having an international audience. So, good evening to you folks in New Zealand, the good folks in New Zealand. What else do we have today? GDP, Q1 GDP, they're expecting 6.5%. They better hit that mark, man. They've been talking about that 6.5% mark for a long time now. So we'll see. Hopefully. Pending home sales. And then tomorrow we get employment cost index, personal income. This is all inflationary data. Core inflation, consumer spending, very important. Chicago Purchasing Managers Index, mortgage consumer sentiment data. So it's been a chock full of hot topic economic data points this week, and they're not letting up through Thursday and Friday. Now, to earnings, last night we had Apple, Facebook, Qualcomm, Shopify. These names did well after hours. Their shares moved up. Boeing did not. Boeing moved down. And those are the only earnings reports I tracked. And we did trade QCOM. And it appears as though, we'll check the pre-market activity there. It appears as though we are going to lock in a profit today on that trade. And we can just set an advanced order so we don't have to sit around our computers and close out that trade. Or if I don't like anything I'm seeing setting up, the only reason why I would close out the QCOM trade is to take advantage of Amazon's earnings tonight and do the same thing. Rinse, wash, repeat. Sell a deep out of the money put, sell a deep out of the money call, generate cash flow with a probability of the shares either being called away from us or being assigned to us, or I should say, to keep it simple, probability of profit between 85 and 90% on those trades. That's what we're looking for. We're not going to trade the NEOs of the world. Way too volatile. We're not going to do Twitter. I hate Twitter. I think ultimately they're going to collapse under their own weight. So I'm not going to trade Twitter. We'll go with Amazon. Big stodgy companies which have very, very liquid options. That's what we want. We're not greedy. We want consistency. So a lot of earnings coming out today. So tonight, since it's Thursday, you know that it's Thursday night stock charts live. What do we do there? Live on YouTube. We go over the weekly charts to identify how we might be closing out the week. However, there is one trading day left to go, tomorrow being Friday, and we know a lot can change, but Thursday nights gives us a really good feel of how we might close out the week. And we'll also talk about the earnings reports out of some of the major names reporting today. So join us 6 p.m. Eastern Standard Time live. There's a link below. Enter your email address if you want to get emailed 15 minutes to a half hour prior to us going live. We hate spam too. You will not be spammed. All right, let's go to the futures. I had gold up here. When I went to bed last night, gold was really ripping. I didn't watch President Potato's speech last night because it's not worth my time. So I don't know if what he said impacted the rally in gold, but I know this rally here was all Jay Powell. So this is a 4-hour chart. We've pulled back overnight. We're still up. Our gold mining, our silver mining trades did very, very well yesterday. I have options on GDXJ, which I sold, expiring tomorrow. S&P 500, 4-hour time frame, we're up over a half percentage point. So apparently the market's like what President Potato said last night. Mid caps looking good. They're pressing up higher by over a half percentage point. The Russell 2000, it's broken out. It's clearly broken out now. So we're going to have to manage that short position. Either sell calls against our short position, meaning we are long of the TZA, which is a leveraged ETF, putting you short of the Russell 2000. Sell calls against it to defend it, or lighten up on the trade, keep a toe in the water, and sell calls against the position, or just simply stop out altogether. It really depends upon the power of how we close out the day. So we're going to be open-minded. However, we're not going to fight this market. You know, if we're wrong, we're going to take our licks and we're going to move to the sidelines. So at current, this 4-hour bar, which opened up at 5 a.m. this morning, Eastern Standard Time, has broken out. We have not closed there. It doesn't matter where we trade intra-period, meaning on a daily time frame, on a 4-hour time frame, and I was mistaken. We broke out overnight. So we have clearly broken out. We have not done a retest yet. We'll see if that retest happens, and if it holds. I was on a daily chart earlier. So we have a continuation breakout here. We're lacking the retest. We'll watch for that. We'll see if it holds. If it holds, we're going to have to make a decision. So members, be ready. What else do we have here? I did not go over the NASDAQ 100. NASDAQ 100 up nearly a percentage point. So what they're doing is they're taking Jay Powell's dovish statements and they're running with it. And no doubt this is a little bit of front running in advance of the GDP report, as well as the tailwinds of Facebook's earnings last night. Facebook is up dramatically. The expected market maker move on Facebook was a move of $13.58. We closed at 309.04. Currently at last tick, 329.20. So we're in the ballpark. Sorry about that noise. I hate that. I try to avoid it at all costs. Apple, Anticipated market maker move was $4.30. We closed at 133.58. Last tick, 137.54 in the ballpark. So Apple is clearly going to influence the markets this morning. Okay, so we've broken out of a very, very sound base on Apple, assuming that we close up today and above 136 per share. Apple looking very strong. Now, I did not want to trade Apple, nor did I want to trade Facebook. What we did trade was QCOM, a great company. So this is a perfect example of it pays not to be greedy. We want consistency. So what we did here was my initial brackets, meaning we wanted to open up a strangle. For those not familiar with what a strangle is, it is an option strategy. You can put on a long strangle, meaning you buy an out of the money or an at the money call, usually an out of the money, or and an out of the money put. In this case, what we did was we sold the put, which was deep out of the money, and the call, which is deep out of the money. So I don't really care what Qualcomm does today. As long as it stays below 150 and above 130, we're sitting pretty. And what we also did, and this is what hurts call buyers, is that going into earnings, options become very expensive. Their implied volatility expands dramatically. It's what I call a fat premium. So what happens the day after earnings when the shares open up, even if you're right directionally on your trade, if you bought the call options, there's a good chance you're going to lose money. And people are sitting there scratching their heads. Why am I going to lose money on my options? Yet I was right the direction the option was going to trade. It's because you're not watching the implied volatility. The options are too expensive. There was too much demand for those options, which drives the price of the option. It increases the implied volatility. And what happens is you get IV crush the day after earnings, meaning the value of the options collapse. So you were right directionally on the call, yet the value of the option may in fact decrease in value, especially if you're trading the front week. We sold the options that expire tomorrow. Now, initially, I was going to sell the 145 strike on the call side. What was my note here? The 130 on the put side. Now, that was about one standard deviation away from where we were poised to close out the day yesterday. And I sat back and I said, you know what? That's a little bit too close for the money to me. The money market maker move has a reading of $6.43 move. I'm within a margin of error there. I want to move out further. Yes, I'm going to collect about half the premium that I would have, but my probability of profit increases by about 10% to about 90% versus 80%. So when the shares started to move after hours, after the earnings announcement was released, it did in fact hit our initial target of 130 to the downside, very close, like 19 cents off. And it expanded beyond our upside target of 145 to 146 and change to the upside. So trust me, when I was watching it after hours last night, I was very, very happy to think that I was not greedy. And we collected a smaller premium. We can close that trade out. Because this morning I'd be sitting here saying, are the shares going to open up 145? Do I stand the risk of a gamma event, meaning Qualcomm moving up higher, up and through 145, and then me having to either A, roll out of the position, which I don't want to do, or waking up on Monday morning being short of Qualcomm because I don't own the shares, yet I sold a naked call against it, and that puts me short if those shares are called away from me on Monday morning. So it's better to err on the side of safety to increase your probability of profit. That's what we do. We're going to try it again tonight with Amazon. So members, stay tuned for that trade. What else do we want to look at here? Microsoft. We booked profits on this trade yesterday. This was an earnings trade. Well, it didn't start off to be an earnings trade. I need to preface that. It evolved into an earnings trade. But we did book a profit on it yesterday, and we're out. So that freed up some net liquidity to do other trades. What else do we want to look at? I want to take a look at the U.S. dollar. The U.S. dollar has been very, very volatile of late. Trying to hang on to the 90 mark. Lots of resistance. We've rallied through it, failed. Back here we did the same thing, rallied through it, failed. Dollar's very weak. It's probably going to get weaker. Let's take a look at commodities and how they're trading this morning. Oil in fuego. So our ExxonMobil trade, they'll report earnings tomorrow. Intercontinental Exchange, which is down in the pre-market, reports, I believe, this morning. Checking in with gold again. It is now down $1. That I don't like. Natural gas was looking really good earlier in the week. It still looks very, very good. Nat gas inventories reports this morning, I believe at 10:30 a.m. Eastern Standard Time. Fact check me on that time. But it should be this morning. And it can move nat gas. Gasoline pressing higher. There's no inflation. Don't worry about it. It's transitory. That's what Fed Chair Powell says all the time. It's transitory. Don't worry about it. We're going to manage inflation. Better people than Fed Chair Powell have managed inflation, i.e. Paul Volcker. And it took him about 2 years to get it under control with interest rates in the teens. Right now, what are they? Less than 2% on the 10-year. So good luck. That's a very bold statement. I just want to check out some ag prices. Corn will do. Corn, it corrected as yields moved up higher. And the dollar, trying to find a base here. I suspect the same for soybeans. Yep, same deal. All right, so I got a feel for ag, commodities, equities, currencies. We're good to go. All right, let's do some chart requests. David, we already did MVIS. Okay. All right, we'll take it from the audience. Don't add any more because I got to get moving here today. John Spencer, of course. SI. All right, so this is why we take a step back and we take a look at the monthly charts. We have only a couple of trading days left to go in the month. What do we have? Today and tomorrow. That's it. So I don't like. Folks, can I be heard? I think I got disconnected with YouTube for a second. I should be back on now. I'll wait for an acknowledgement before I continue. Okay, good. Thanks, JW. Okay, Silvergate bearish key reversal bar on the month. So there's a major fly in the ointment with this trade at current if we're looking to get long already. Weekly chart, we're holding on to the moving averages. I'm not a big moving averages guy. I like historical support levels better. And we are near historical support right here. Oh, wrong. I didn't mean to add these. $109.18, critical support. You don't want to see it close. As a matter of fact, I'm going to move it down a little bit to reflect last week's lows. 107.38. A break below that mark would put you below last week's lows. I wouldn't want to be there. We're flirting with holding one of these averages and not another. Mixed week. Volume is declining and is poised to come in well below average, which is good versus the 2 prior weeks of selling. Here you have a trading range. You have an upper band of resistance at 174.02, lower band at 107.30 per share. And there's the value of the automated trend lines. We're using TrendSpider, 35% discount code below. I'm not going to go into my pitch here. Daily chart. All right, so you have a nice consolidation forming here on SI. If you're looking to get long, okay. You just have to commit to using a stop on a break below and a close below the lows of the 20th of April. Because that would be a significant break on SI. And you want to stay small. Then watch for a breakout above resistance. Oh, I already have broken out. We have broken out. So we popped up higher here, failed, but we had a breakout in time yesterday. They popped it up higher. So I think you could put on a trade here if you're looking to get long. You have a lot of overhead supply here, so I would respect that. We close above 130, look to add to the trade and build on strength. That is SI. Mo, Philip Morris. Oh, you can tell my age. Formerly Philip Morris, now Altria. All right, so I read an article. Somebody's got to fact check me on this. I almost fell off my chair. President Potato is going to ban menthol cigarettes. I'm shaking my head literally with my hand over my eyes because I just can't believe my eyes anymore with what I read. I don't know what this means for Philip Morris. I don't like the chart per se. I did like it the last time I reviewed it, but we have faded here on the month. We have retested support. Believe it or not, JW, I don't even want to sit. YouTube is so hyper. If you wonder why my channel doesn't have 20,000 views, I get throttled back. So I'm reluctant to say the reason why. I use certain buzzwords at times, and it just gets me in trouble. So use your imagination. What is everything in this world based upon nowadays from these moronic idiots in Washington? And you'll come to the answer quick enough. Weekly chart, Altria. we're kind of like in no man's land. I'm surprised at this price action. Last time I looked at this, it was so strong. Steady gains. Did they report earnings or something? What happened here last week that caused this collapse? Was there a news event? Very disappointing. I mean, this was ready to rocket ship off. Just goes to show you the value of you holding your stops here. Because this is our support level, 50.92 on Philip Morris, and it failed. They're coming out this morning. Okay. JW, I don't smoke, but it's annoying. That's the libertarian coming out of me. Hey. Yeah, I'm pretty much a libertarian myself. Definitely a fiscal conservative, but fairly libertarian. Just get government out of my life. It's going to shoot today. Do you have a trade on? Listen, if they sell it off hard at the open or over the course of the next couple of days, I would set an alert. I don't know if you have TrendSpider or not, or whatever charting software you use, if it's got a decent alert system. Set an alert down here. I'll give you the number in a second. Okay. We'll keep this active for a couple of weeks. I don't like the fact that all of a sudden tobacco is political again, and that kept me away from the tobacco stocks. And really, I'm dating myself when they were being investigated by DOJ back in the late 1990s. They've done a good job of staying out of the news, but now it appears they're becoming political fodder again. So beware of that. Daily chart. Yeah, we have a lot of resistance above. Again, the power of the automated trend lines. A lot of resistance above. Let's take a look at seasonality. I want more. There's a lot of data on Philip Morris. Well, Altria, I keep doing that. I'm going to keep doing it. I'll never call this company Altria. Let's go back 13 years. May is seasonally a meh month. June is not a good month. It's the weakest month of the year. June. So May is a meh month. June weak. It improves in July. Seasonality really begins to pick up in September, because then you go into October, very strong. November, okay. December, really, you begin to trend up higher. Into April, then you bail. I'm not loving the seasonality here. So I would wait for support to get hit. No reason to go buying right here, right now. So I would avoid MRK. We're going to leave off with MRK. I see Gay joined in. Gay, you have symbols? Gay's one of our members. All right. So Merck is consolidating. What we're looking at here is a W formation, a higher low. Here's your W, left side, pivot point. The top of that pivot point, let's change this, is 87.82 per share. Here's the right side of your W forming. We retested the lower band of support, creating a new data point, a new higher low in March. Weekly chart. At current, I don't like Merck because we had broken out last week. This week, we're failing to hold support. We have 2 trading days left to go, so a lot can happen here. If we manage to recapture support and close up on the week, then the story changes with Merck. But at current, we can only deal or play the cards we've been dealt. And right now, we're trading down below support. It's a weak week, pardon the pun. Daily chart is the power of the automated trend lines. Take them off. Put them back on. Here's your higher low, right? But we broke support yesterday. So I would avoid this and wait until we rally back. Rally and close back above, let's say 77.50, 60, because it is rising. This current now resistance level is rising. So shall your resistance. If you're looking for a point at which to buy, you could test at 76 for an extreme 75.31. That's Merck. KMI. Kinder Morgan. Wow, look at this rip. Look at this rip. And it yields no less. Okay, I mean, what can you say here? This is what you want to see. I just took the automated trend lines off. Why? To provide a visual. Time saver. Click of a button. Bam. Here's your lower band of support in blue. Upper band in green. We have a monthly breakout on the month. 2 trading days left to go. Now, on a weekly chart, this is a beautiful move up higher. Let's take our crayon out. Draw support. Let's overlay our trend lines. And you can see that while we broke out yesterday, we also have resistance above here in red. So we are in on a weekly time frame and an ascending wedge formation. The path of least resistance remains higher. What I'd look for here is a pullback and a retest of the breakout point on a weekly time frame. We'll keep this active for a couple of weeks. Just keep in mind that this is going to act as a rising upper band of resistance. Can we break out and above it? Sure. Then this becomes your rising upper band of resistance. So KMI looking good. I would rather fear than hope. So what do? We wait for a pullback and a retest. I don't want to hope that we're going to break out above resistance. I'll wait until that happens. We'll revisit it. Daily chart. We broke out on a daily time frame yesterday, not above 1 resistance level, not above 2, but 3. What I want to do here is I want to overlay weekly resistance. And there you can see on a daily chart in dashed line is weekly resistance, providing you guidance of where you will see resistance above. Let's see if we can get monthly resistance on here. We have monthly support, but no monthly resistance above on a daily. So the chart looks good. The path of least resistance remains high. Loving the volume trend, which is up. So nice trade. And with that, folks, everyone have a profitable trading day. Join us tonight, Thursday night stock charts live, 6 p.m. Eastern Standard Time. We'll go over the earnings reports that were released after hours. We're going to go over the weekly charts. How do we appear poised to close out the week? Because that's when we set our strategy for the next trading week. So join us tonight. Enter your email address below. We will not be spammed. Get alerted 15 minutes to a half hour prior to us going live. Click like, you know the deal. And again, have a profitable trading day. Be well.